Investors, what is going on? I wanted to join you just really quick for a quick video. I wanted to talk about some of the things that are going on from kind of a macro environment, some of the stuff that we're kind of actually seeing here on YouTube, different economists, different influencers and whatnot, talking about a market crash. We'll talk about, look, are they right? What are some of the indications? I think more importantly, whether or not they end up being right or wrong, I think some of the indications that you will be able to look for to see if the market is actually topping out at these levels. We'll talk about that broadly, okay? We'll look at the S&P 500. We'll also look at the NASDAQ. I just did a video on Facebook, and man, this stock absolutely tanked in the after hours. That should likely pull back markets quite a bit heading into tomorrow. We also have Amazon earnings into tomorrow as well. If they put up a stinker as well, that could really put this market in a little bit of a turmoil, at least in the shorter term. So we'll talk about that, but I want to talk a little bit about Meet Kevin. This was brought to my attention. Look, Meet Kevin, as I understand it, actually has either an economics degree or he studied economics at UCLA, which is a fantastic school and a fantastic background. So I actually believe this guy knows what he's talking about. Whether or not his strategy, though, is one that you need to follow, is one that we'll discuss. So apparently he just decided to end and disable the comments because it appears that he was suggesting buy the dip in the stock market. Look, and that has worked for a really long time. When you look at the stock market, you could stretch this chart back going as far as you want. Buying the dip certainly has its take. And look, I actually drew this. This is the S&P 500 right here. And I showed you just over the last 3 years, we've had an 11% drop, a 20% drop. Here's the pandemic hitting the United States in March of 2020. You had a 35% drop. Then you had another 10% drop. And then you had another, more recently, another 12% drop from the highs. Overall, though, factoring in all those drops over the last, really since the lows of March of 2020, the S&P 500 is up 119%. So always take a step back when we start talking about market crashes. Is the market topping? Is it going to crash? Understand just over the last 2 years, you've had three rather significant corrections, some in the 10% range, some is going as high as 12%, and one actually being 35%. So with 119% gains, you are going to have to stomach some of the losses. Now, I think some people are upset with him because he kind of preached buy the dip, and then all of a sudden he said, I'm out of the stock market. And so is that good risk management? Is that something that you can take with you? What I would encourage all of you out there is have, different portfolios. Okay. This idea that we need one portfolio and we put all our money into one portfolio and put all our money behind that, I think is a mistake. I think you should have absolutely a retirement portfolio. If you're my age or a little bit younger, I just turned 40 years old, you should have money set aside for retirement. And how you decide to manage that money, in my opinion, is a little bit different than if you want to set some side of money for maybe you need a down payment for a house. Maybe you just want to set aside a little bit of money for just in case you lose your job or you want to take some time off. You want to have some money set aside to be able to cover those expenses or cover some bills. Okay, that's completely different than retirement. Okay. And how I manage the risk on each of those investments would be something that I would think greatly about. Now, so I don't like Meet Kevin's idea that he's all in on the market and then all of a sudden he's all out because he claims that the market cycle is over. He's basing his call on that. He's basing his call more on kind of macro environment type of stuff. I don't necessarily think that is great advice for everybody out there. And look, what do I know, right? Some of you guys are probably like, I don't even know this guy. Okay, here's my IRA account. It's my most important investing account. It's the one that I invest in individual stocks. Here's over the last 3 years in my E-Trade account. My portfolio is up 105%. NASDAQ's up 90%. S&P 500 is up 64%. And the Dow Jones is up about 40%. This would put me likely in the 1% percentile of investors in the world, period. Institutional, individual investors. When you're not only beating the markets, but you're beating them all, including the NASDAQ, which has had an epic run. Not only that, this portfolio yields about 2.5%. So not only am I beating the market, but I'm also getting paid a little bit above average dividend yield on it as well. And so look, I have some experience in these markets. And so what I would, first of all, understand that you're going to have drops when it comes to the market. Okay. Markets are going to go up. They're going to go down. down. But let's talk about something that actually has happened recently that would have me a little bit concerned, and I actually can get on board a little bit with Meet Kevin's idea. We also see Graham Stefan. It's interesting. 5 days ago, he says the stock market is about to bottom, and now he says the upcoming stock crash. Understand that these guys, their business is YouTube. This guy has 3 million subscribers, okay? Meet Kevin has 1.8 million subscribers. It would actually be really good for his business if he does make the right call here. If he doesn't make the right call, it doesn't matter. This guy still is going to get plenty of views, still going to make tons of money off YouTube. But if he does make the right call, he does predict that the market is topping out. Well, all of a sudden, everybody will think he's the next prophet of the stock market, and he'll probably stand to gain even more money. So understand that some of this and a lot of this has to do with views and clicks and those types of things, but it also is a risk taker. Both of these guys take a lot of risks. They wouldn't get into their life and where they are in life without taking those risks. So they're kind of taking a calculated risk, saying we're kind of topping out. I will tell you though, what's interesting about the stock market. So we had the March lows. Okay. Obviously the pandemic hit the shores of the United States, but notice since it bottomed in the late March, notice that we've basically made a series of lower highs. That's all these little, the stock market goes up, it comes down. Stock market goes up, comes down. Notice that every time it's come down, that low is higher than the previous low. Okay, maybe there's some small, there's some small, but it's still a higher low. This is a higher low all along here, higher lows, higher lows, higher lows. All along here, there's almost very little deviation. And in fact, when we look at the NASDAQ as well, it's probably even more pronounced, okay? Higher lows all across the board. But what happened recently? And this was actually a technical signal where I did take a little bit of my investments off. Now, did I sell everything like Meet Kevin? No, I think the all-in, all-out plan is no good. But I took some stocks. I looked at some individual stocks. I looked at NVIDIA. I looked at JP Morgan. I looked at a couple other stocks that I own, and I had pretty full positions into them. And I said, look, if the stock market is starting to roll over here, I would like to sell some of my positions, free up a little bit of cash with the opportunity to come in here and buy at lower prices. Notice what happened more recently though. Okay, so we made a higher set of lows here all across the board. We're making higher set of lows, but look what all of a sudden happened. This was last week in January, late January, the stock market actually came right back and retested this. Now, from a technical perspective, not necessarily the worst thing in the world, but some technical analysis will tell you this is the sign of the market starting to top. Once you stop making higher lows, now we're in a new cycle. Now, what people might say is, look, the stock market rebounded up here and it went all the way back up here. Well, look what might happen though. If the stock market goes back down and puts up kind of a red candle, not a one day, okay, but over the several weeks or maybe even a month, it comes back down here. And then yes, we have another rebound, but then all of a sudden it stalls out and comes back down. Well, guess what? Now you're making a series of lower highs. So here, a grouping of highs here. We could find that this could be a top here, and we've created a series of highs here, lower set of highs, lower set of highs. So I don't necessarily think Meet Kevin is dissecting it in this technical way, but from a technical perspective, you could argue that yes, we did bounce here, but if this bounce doesn't get above the previous highs up here at 4707, right now on the S&P 500, we're sitting at about, we'll call it 4,600. It still needs to go up another 100 points to really show that this was just a very, very temporary thing. If it does not get back up to this point and we come back down and we breach this 4,300 level, I can't emphasize this 4,300 level is actually a pretty technical level. I'll turn it to purple now so you can see it really well. This level right here, that would signal that you take out the previous lows that we made here. It also would signal that we took out the previous lows here. And now we're all of a sudden, instead of making a series of higher highs, okay, along here, you've made a series of higher highs. It looks like you had a small blip in the radar here. That's why we don't like the all-in, all-out approach that Meet Kevin kind of prescribed over the last week on his channel. And he probably deserves a little bit of criticism in the comments. And I don't blame him for turning the comments off. It's his channel. If he doesn't want to listen to that stuff, he doesn't have to. But the all-in, all-out approach would not not have worked here. In fact, you would have missed at least 40 or 50% gains if you had gone all out over here. But just understand from a technical perspective, the market, yes, we've bounced from 4,300 back up to 46. We're likely to see this pull back tomorrow unless for some reason the markets decide to reverse, but it looks like Facebook is going to start pulling these markets down based on their results. Well, that does not have me saying that this is not a topping pattern over here. So the market is on edge a little bit. Despite this nice little rebound that we have to actually see this continue to follow through to the upside to not just create another set of lower highs in this area. And if it doesn't, this could be viewed as a topping pattern. Now, I will say, I wouldn't say if we break down below here, we should find some support at this 4,300 level. We did wick through it one day back in January. Again, what I would be looking for is a solid break below it. In fact, you need to close underneath this, okay? These little wicks, these little thin lines through here, this is just breaking through intraday. It is intraday panic, intraday noise, so to speak. You need to actually close below this. You put red candles below this. In fact, most traders will be looking for 2 consecutive red candles below the area of support, and all of a sudden that will trigger a lot of technical selling. And so you just want to keep in mind, now you can set stop losses, you can set limit orders, you can do a lot of things to protect yourself. Also, you don't have to be all in and all out. If you own 10 shares of a company, if you own 100 shares of a company, you don't have to sell it all if the technicals start to break down. You can sell a portion of it when it initially breaks down. If it confirms itself in the coming days and weeks ahead and it continues to move lower, you can continue to trim your shares. Now, and I would also just, again, base your selling off the portfolio you're working with. If you're saving up to buy a house, if you're saving up for that, that is critical money. You would not want to see that wipe down 20 or 30%, okay? And so I can understand being way more aggressive based on the technical patterns and based on how you're feeling on that portfolio. If you've got a retirement portfolio that's still 20, 25, 30, or 40 years away from you needing to touch it, I wouldn't be necessarily as aggressive on that, because as we've seen, this market has broken down multiple times on this massive up leg. This could be just a blip in the radar, but right now there is some validity that the market is showing quite a bit of weakness. I think these guys are doing a nice job kind of playing it up for views, playing it up for subscribers. And honestly, if they turn out to be right from a business perspective, it works out very, very well for them. So I think they're playing this very, very nicely and very much from a savvy business person perspective. But you as the individual investor and somebody that manages your own portfolio, or maybe your wife's portfolio or your entire family's portfolio, you just want to wait for these confirmations, okay? We don't have to panic right now. And as soon as this market reverses, we don't really need to panic until we break this critical level here at 4,300. That will have signaled that possibly this is actually the top, but just be patient until it actually does. That was the Investor Channel for today. We'll be back again soon with more this week. Good luck with your investments.